Hello and welcome back to Explain the Charts. Today we're diving deep into the NZDUSD market, examining both recent news and the technical landscape to provide a comprehensive view of the current market conditions and future prospects. Looking at the daily chart for NZDUSD, we can see a clear recent downward trend in the price. This bearish trend is quite apparent on the overall chart. However, there are important price levels to consider. The NZDUSD has shown significant volatility recently, as evidenced by the large price swings observed in the daily candles. News reports indicate that the decline is partially attributed to various factors, including changes in global risk appetite and shifts in interest rate expectations. Let's narrow our focus to the last 2 weeks of October 2023. Here, we observe a more pronounced period of bearish price action. This is clearly a significant period of downward price action, as indicated by consecutive daily candles. Switching to the 1-hour chart, we can see the shorter-term price fluctuations. The 1-hour chart provides a more granular perspective on the recent price movements. It gives us a finer look at the price movement. This is the most precise level of price detail shown. Notice the short-term periods where the downward trend would briefly reverse. There's a notable amount of short-term volatility. Now, let's examine the 15-minute chart to get an even more detailed view of the price action within the hour. The 15-minute chart provides high-frequency data, revealing finer details of the price movements. In comparison to the other time frames, it shows small, volatile movements. Correlating the charts with the news, we find that periods of heightened global uncertainty often correspond to increased volatility and downward pressure on the NZDUSD. The 15-minute candles highlight the rapid price adjustments during periods of high volatility. Returning to the daily chart, we can identify potential support levels around the 0.58 to 0.59 range and resistance levels near the 0.60 to 0.61 range. These levels are based on recent price action, and their importance may vary over time. Based on our analysis, it's reasonable to consider short-term bearish positions if the price breaks below the 0.59 support level. Conversely, long-term bullish positions are only viable if the price can break through and hold above the 0.61 resistance level. Considering the overall trend, it's important to stay aware of the 0.58 support and the 0.61 resistance levels. A clear break below 0.58 could signal further downward momentum. Breaking and holding above 0.61 could signal a shift to a bullish trend. However, without more supporting information, it's impossible to say with certainty which of these is most likely. In summary, the NZDUSD market shows clear short-term bearish trends, while longer-term trends are less certain. The 0.58 to 0.59 range appears to be a support area on the daily timeframe, while the 0.60 to 0.61 range provides a resistance area. Keep an eye on economic news releases and global events for significant shifts in the market. Remember, these are simply observations and potential scenarios based on the data and news available. Market conditions can change rapidly, so always use caution and practice responsible risk management.